Hello, hello, friends. Back at it with another Forex Friday for you.
Nice.
Let's just jump into it. Cooking with Crisco.
My man.
All right, we're going to start things off with the DXY per usual. So big move recently just because of the inflation number that came out. Surprise at the downside at 8.5%, which is not ideal, but it was a surprise at the downside nonetheless. Woo! So we saw this big move down right here that you can see, and clearly went back into the previous range. And as I was talking about in previous videos, this is really the level that I've been looking out for because if it can hold above this range, then it's probably at some point going to retest at least the midpoint, if not the range high. And if it can't, then there's no reason that it won't head all the way down here toward this previous range low.
Yep.
And you can see we actually did catch a little bit of a bid here in this demand area. And we're now retracing a little bit higher, getting some decent momentum up potentially to this range high again, or the previous range low. And I will want to see how it reacts to this. If it ends up reclaiming, getting a few maybe 4-hour closes, candle closes above that level, at which point I might get a little bit more bullish. I still think that people kind of overshot this. I think the CPI coming down a little bit is a good sign, but that hardly means the Fed is going to take its foot off the brake, because it's slowing the economy.
Totally.
So I do think that the dollar is still potentially headed higher in the longer term. Now in the medium term, I don't know. People still need to digest this news, but so yeah. Again, hard to say. I'm not here to predict anything, and definitely not give financial advice. But I still would be betting on the dollar long term. I think in general the flight to safety narrative has not really changed. And if the Fed is going to ease up on rate hikes, I would assume that other central banks are also going to do that. Because really the reason, in large part, that they are raising interest rates is because the Fed, and I mean obviously to fight inflation, but when the Fed raises interest rates, they kind of have to follow suit. Otherwise that interest rate differential gets out of hand and it can really put pressure on their currencies. You know, like the euro, which we'll get to soon.
My man.
But for that reason, I don't think that this is going to be a continued downward move. I mean, if this really is based off of the Fed pivoting soon and interest rates not going up as high as normal, or I mean, not as normal, but as high as expected, then I still don't think that's really that different, because the ECB, the Australian Central Bank, all these other central banks, they are potentially in the same boat. It's not like inflation is only going to be coming down here. There's a very good chance it's going to be coming down globally, which in turn would mean that all these central banks really start following suit. And then when that narrative kicks in, then the relative dollar strength will start leading to an appreciation in the long run relative to other currencies. So I think for that reason that the dollar really maybe has its strongest days ahead. For those of you who know about Brent Johnson and his dollar milkshake theory, I think it is a pretty reasonable analysis. But enough of the macro. Let's talk about the micro.
Woo!
So we got this line right here. This is the line of truth right now, the range. We want to see how it reacts to this, if it's able to close above or close below. I generally like to see, especially for macro kind of levels, I would like to see a higher time frame close. I don't know if I would go as high as daily, because sometimes if you wait for a daily close, you can miss your trigger, but whatever works for you. I would definitely be focusing on this. I want to see at least 1, maybe 2 4-hour closes above this level, above this high right over here. Oops, that's not what I want. Above this high, where that range is. Or I want to see a wick into it and the close below, and then maybe another 4-hour close below, at which point I might be willing to go short certain dollar pairs. So basically, this is the line of truth in my mind that we need to be looking out for to see if the dollar is willing to reclaim it, if it has the strength to reclaim it and close above it in a sustained manner, or if it is not able to. Maybe it gets a little bit above, but then closes shortly after below that level. But yeah, so just looking for the candle closes, higher time frame closes, like a 4-hour, maybe even 8-hour, or a series of 1 or 2 hours. Got it?
Yep.
Okay, let's transition. So here's Euro USD. As you can imagine, just because the dollar index fell, Euro caught a bid pretty dramatically, and you can see it came right outside of this range that I had outlined right here. But now we're trading back below, and again, this is the 4-hour chart, so we have multiple closes below this range high, which to me is definitely a sign of potential short sell. So, and not only do we have these multiple candle closes, I suppose this candle's still live, but realistically this is probably going to close underneath the range. We have multiple candle closes, and we broke this low. So hard to say if you want to, if you want to consider that a break of structure. It's up to you. I don't know. It's a little iffy because it's shorter term, a little consolidation, but still not good. So we broke below this, and we're not really catching a serious bid yet. We could drop down into this area of demand. I would look out for that. I'll map that out to make it a little bit more clear. I mean, because this is where that original impulse really started, and it's certainly possible that we come back into there before continuing upward. But I still think closing outside or below this range opens the door for a potential shorting opportunity, and I think the risk to reward would be decent. Basically, just get in on a retest. So you could have your stop just like right above. I mean, you could even do it above this candle, but maybe give yourself a little bit of breathing room. And see, the risk to reward is not great. I usually target midpoints when it comes to this, which would give a 3R trade. You could, if we go down to the hourly chart, you could probably tighten your stop above. You see, this isn't the neatest price action here. Okay, so entry obviously around a retest of this level right here, maybe even a little below in case we get a wick. And you could even call it above this candle right here. I would put it at least above this last green candle, so you can even tighten it right there if you're really trying to keep it tight.
That's what she said.
All right. And yeah, so entry right here, and then with the take profit would probably be, you could target this zone. Like I said, I usually like to do a 3R trade at the very least. So I think targeting the heart of this zone wouldn't be necessarily bad. If this did end up being demand, there's definitely a good chance that it still gets down to this level off of this retest. And this could be like a counter trend for sure if this ends up being demand for a continuation higher. But nevertheless, I think the fact that we're closing below this range high is significant. And hard to say if we'll get that retest. Oftentimes, price never gives you that opportunity. Life's a bitch like that. What are you going to do?
Totally.
But in the short term, if this dollar weakness narrative continues, call it, so go back to the DXY. If we do see the DXY, we see it unable to close above this level, then we will likely want to consider this demand zone as a buying opportunity. So you want to use the DXY you want to have the DXY inform your opinion about Euro USD, because obviously they're very related. The Euro USD is about 55% of the DXY. So aside from that little counter trend potential retest, which, just looking at the way things are going right now, very possible that doesn't happen. And if it dipped back into this demand and then came back in, I would be less willing to take it just because, potentially garnering a lot of momentum or strength from the buy side liquidity that it pulls out of here and then heads back up to this range high. So if it touched down into this demand zone and then went for the retest, I'd be less willing to take it. But getting back to the earlier point, I would focus on the DXY. If it closes, it looks like it's going to close below that range high. At around the same time, you're seeing the Euro USD operate or trade within this demand zone, then I would probably be looking for a buy for a continuation to a new high. Call it like right there. Oops. Fucking hate these arrow things.
You're a fucking idiot.
Okay, so what would that look like? Let me just get the order out. And now for larger zones like this, I usually target my entry as the midpoint, roughly, of the zone. So basically where that arrow started, actually. And invalidation, obviously right below the zone, the impulse off of which this high was made. And then again, just targeting the high point. Because if we're going to continue this move, this momentum, presumably we are going to make a new high. And this risk reward is fairly decent, but again, I wouldn't really be interested in taking this trade unless I see the DXY, it looks like it's going to close below that level. That, what is the actual number? That 105.55-ish, 105.50 level. If it's looking like it's going to close below it, then I think the long Euro USD from that demand zone is definitely in play. All right, moving on. Okay, so this is AUD JPY, the Aussie yen. Let me get a 4-hour. This looks whack. Okay, so we had this range right here. Range low, range high. And then we had this dip below that led to this large impulse back up and beyond, about up to and beyond the midpoint. So this is a pretty common move. You just get these little deviations before price returns back into the range, maybe even gets all the way to the range high. Now, if this momentum is going to continue to the upside, what are we looking for? We're looking for some sort of demand off of which that will happen. So price will rebound into some level of demand. And I mapped out this level. You could go consider this all the way down here, really where the impulse started. But I think having a retracement that far down is unlikely. It could happen obviously longer term, but in the medium term, on its way potentially to this range high, I think this level of consolidation, we had this big impulse, kind of a little retracement, small consolidation, and then the next impulse up. So I would look to this as the level of demand, right? Because you have this big impulse right here. See, wick to wick, get this kind of fair value gap imbalance here. So I think this is a decent area of demand to look for some potential buys. And what that would mean is price potentially retracing back into here before ultimately making it a new high at the very least from where this is. That's usually the first target, just a new high. If not, you could target some quasi supply. I guess you could say this is supply right here. If this doesn't already kind of capture any sell side liquidity that's there and then heading down. Otherwise, I would target after this high, this untested supply up here. So this is from a while ago. This is from this very large impulse, and we had a pretty steep drop right after. You have this one singular candle, kind of this potential order block right here. And as you can see, it was never tested, even by this kind of swing high right here. So we came back down below the range low, grabbed a lot of liquidity, had a strong impulse back up all the way up to here. And so what I'm seeing is potentially a retracement down into this level of demand before a continuation to pull from that sell side liquidity that is potentially left up in this supply zone right here. Right?
Yep.
All right, and that was AUD JPY. Transitioning. Okay, so this is Aussie dollar. What are we on? The 4-hour chart. Okay, so got a lot of busyness going on here. I'll do everybody a favor, and I will just start from scratch. So, now what all that craziness was basically just outlining, number one, the structure. So we're in a clear downtrend, right? We had, actually I'll just do it this way. So we had a high, we had a low down here, we made a high here, and then we made a lower low, and now we're in the process of potentially making another lower high. So this structure is clearly down. We have our high, we have our low, we have our lower high, we have our lower low. So if that structure is to continue, we are likely going to make, or if it is going to continue, we're definitely going to make a lower high. And the high, that lower high would be in or what am I saying here?
Idiot.
So the new high, or the new lower high, would be lower in relation to this high. That's what we're looking at right here. So somewhere in this level, this is our supply zone where we would expect price to come into to meet that sell side liquidity before continuing this downtrend and bearish structure. So let me go and outline. Now I would say this supply zone is pretty. It's not small. It's pretty big.
That's what she said.
So we'll go ahead and draw this out from. We'll just include the. Yeah, we'll skip that wick. Okay, so this is basically the area I'd be looking at, because if price is going to continue its structure, we are going to probably bounce off somewhere in this general area. Now, because this zone is a little bit larger, what I normally do is just take the midpoint of it. Because if you try to base it off of the bottom of the zone and then have your invalidation at the top, it can complicate your risk to reward. It just doesn't make it worth it. But if we target the midpoint as our entry, then the risk to reward becomes much more appealing. And so the invalidation is just a little bit beyond the high. You can give it some breathing room in case we get like a slight little wick liquidity grab. But this is the high right here, so invalidation right above there. And we're going to target a new low, because that would be a continuation of the current structure. So this is what I'd be looking at for Aussie dollar. And this risk to reward is 6, so honestly I'd even get a little bit more breathing room, because you'd hate to get stopped out of a good trade for no reason other than your stop was a little too tight. So that's pretty good, and we still got over a 5-hour trade. And if you want, you could, instead of loosening the stop, you could just move your entry down a little bit. It's basically the same thing. Just keep in mind, you don't want to sacrifice your stop loss in terms of moving it, in this case, below the invalidation level. So if you lowered your stop to somewhere, call it, let me map this out, somewhere like right here, price could easily trade right into that and then go down, and that wouldn't have been an invalidation. That would have been consistent with the structure, and yet you still got stopped out. So you want to make sure your stop loss doesn't take you out of trades like that. The invalidation is this level, and generally you want to give yourself a tiny bit of breathing room, because sometimes you'll get like that perfectly equal high, and you know, if you trade consistently, you'll know that spreads will get you out of trades that really shouldn't. Like price sometimes will get right here and your stop will be right there, and it'll take you out because of spreads. So be aware of that. Give yourself a little bit of breathing room. That way, because in general with all your trades, you don't want to be taken out until the trade or price action has really invalidated the trade. Right?
Yep.
Okay. So we got this entry around the midpoint of this supply zone. Invalidation clearly above the previous swing high. And then we have this lower low right here. That is where our target, or where we're targeting. because price, if it's continuing the structure, will pull from this supply zone, meet that sell side liquidity that is potentially left here, continue the structure, continue the structural downtrend, bouncing down from this level to the lower low. Easy as that. Okay, let's transition. Keep the ball rolling. So this is GBP USD. All right, so what do we got here? So right now you can see that we're definitely in a downtrend. So we got this high, this low, this lower high, this lower low. I guess you could call this the lower high, a lower low. And right now we're in a short-term uptrend. And I mapped out this level right here because if this is the previous swing high, you know, the lower high, and price breaks above it, that would be a break of structure. And that would be a sign to potentially go long. Now, we're not there yet, so I wouldn't be really looking to long this right here. I mean, you can tell we're touching in this level of demand. And I honestly hoped that I don't like when demand gets tested before I'm willing to take a long, because I want to make sure any liquidity that's in there or the maximum amount of liquidity is still left there. And if you have price come back down into that level, then if there is liquidity left there, it'll pull it, and then if there is a retracement, there'll be less momentum potentially to continue that trend upward. So that's why I generally don't like to see price dip into a demand zone that I'm interested in prior to me actually wanting to long from that level. Nevertheless, if we do see price continue up above this level right here, a break of structure above that previous swing high, then I will be looking for some sort of demand level to buy off of a retracement. Now, that could change. This is just a demand level I have mapped out right now based off of this big impulse, but we've retraced into it since, so it's possible that maybe we consolidate in here and then have another large impulse up, and then there's a demand right here that I would be looking to long if that retraced after breaking structure. So again, this is the high. We just want to see price break structure, break above this level, and not just like a wick. You'd want to see at least some meaningful deviation above it, right? And then a retracement into some level of demand. Now, it could be this level again, hard to say. We'll have to wait to see how price action develops. But after it deviates above that structural high, break a structure, that's our cue to look for longs on a retracement into a demand level that we identify. Now, if it doesn't break above this level, we could be looking for sells off of, because this is the high, right? So if we're continuing the structure, then presumably we're going to make a lower high. So where would that be? Now, we could have already put it in, totally. I mean, looking at based off of this level, this could have easily been the supply, this general region right here. And you can tell we've touched it twice now. So it's possible that this was the high and we're now headed toward making a lower low. You could always look for some sort of pullback into this zone one last time, or even this kind of quasi supply right here. Or maybe that price even comes back a little bit higher to fully test any potential supply or sell side liquidity that was at this swing high without breaking it again, because you don't want it to break structure, because that would kind of invalidate the thesis that you're in a structural downtrend and going to be making a lower low. But be open to both possibilities, because right now price action isn't really giving us a true signal on which direction it's headed. I think it's possible that we do continue higher for break a structure, but there's also maybe even a higher chance that it continues the current downtrend, the current structure. You always want to have your base case be a continuation of the structure, because you don't want to fight the trend. You want to trade with it.
Nice.
So just to reiterate, like I said, this could have been the high right here, and we are headed lower to make a lower low. a lower low being this region right here, based off of this. So yeah, again, you could look for some pullbacks back into this level potentially, but keep an eye out to see if it ends up showing some strength and pushing above this high to break structure, and then keep an eye out for some sort of demand level based off of this price action to take it higher. Got it?
Yep.
My man. All right, transitioning. So now we're going to talk about Euro CAD. All right, this is fun. I don't know why I included this, but we're going to find out in real time, guys. This is exciting.
Yeah, baby.
Okay, so I suppose I probably included this just because we're in a pretty tight range right here. I mean, this is a beautiful range, right? And we're at the midpoint right now, so in no man's land. Now, whenever I see a range, what I like to look for is some sort of deviation from it. I mean, we've already seen it in some of the previous pairs that I've gone over, where you see a deviation just like somewhere in this region. So price would like come into here, do whatever it does, and then it comes back down. And that happens so often. And it could happen at the bottom too. So we have price comes down all the way here, has some deviation, and then comes right back up. And the risk to reward for these deviation trades is usually pretty good, because you can keep your stop loss relatively tight because your entry is at the deviation. So you don't have to have like if your entry is like right here, your stop doesn't have to be at this level, which is, what is that, like a 1.2 risk to reward or something? It's terrible. Terrible. You don't need that. Ain't nobody got time for that. So we're looking for some sort of deviation on either side. I just had this here as an example, but obviously not married to the idea that we're going short. Let me get this out of here. Okay, let's actually, there we go. Make that a little bit tighter.
That's what she said.
Okay, so we are obviously headed down right now. A little bit of bearish momentum. And what that tells me is that the chance of a deviation to the downside is probably a little bit higher. So I am going to be looking for that deviation play. Let me get my long out. And generally, I would either target the midpoint here. Let me get the risk to reward down, because I usually will go either direction. It really depends, but as a general rule of thumb, on a deviation trade, I will target either the midpoint or obviously the range high. The midpoint being more likely to hit just because it's closer, but also very, very often what you see in these deviations is just a return to the midpoint, like right above it, and then maybe even a continuation down again, or just like some sort of like choppy price action before going up to the range high. So you just have to hold the trade longer, which is, if you, depending on what you're trading with, there could be like negative carry or margin overnight costs or something. But so sometimes it's easier to just target the midpoint. But let me get my ruler out. So what I like to do with these, because especially when you don't have any price action to base this off of, right? You're looking for a deviation and you have no idea where it's going to be. And the annoying thing about some of these deviations is they happen fast. And with Forex especially, so many moves happen when I'm asleep, which frustrates the hell out of me, because I don't always just want to place orders, but I'm not able to watch price all the time, especially during like London Open or, Asian close or whatever it is. So sometimes I like to just place orders. And what I found for the deviation trades is taking roughly, call it a sixth of the range. So this is 324. And I'm not here to do public math. So let me get my calculator. And we'll get a slight intermission. Okay, so we got 3 22 divided by 6 is roughly, call it 54. So what I would be looking at is from this range low, go down about, oh wow, that's basically where I had it. That's crazy. Yeah, so we'll do 53.6. And honestly, that's basically where I have this right now, but that is where I'd be looking to enter. And the reason I do this is just from a little bit of back testing that I've done. I've seen that during deviations, that is roughly a good level to shoot for. Sometimes it's a little bit less, sometimes it's a little bit more, but the 6th of the range is a decently reliable distance where you don't miss too many, but you also don't end up getting stopped out of too many. So that's why I like to do the 6th, but admittedly, I need to do more back testing to get a more definitive range and kind of figure that out, but I still say that 6th of the range, a 6th of the range, is pretty decent.
My man!
Yeah, so basically, we'll just leave it where it is for simplicity's sake. And you can tighten this stop to, I usually like to do at least 3. I say that all the time, but I want to reiterate, don't do less than 3. Unless you got a really good win rate, long term, you're just going to bleed yourself dry. Okay, but that is what I'd be looking at. Now, if price turned around and started heading north, up, to like towards this range high, then I would be doing the same thing, but for a sell trade. So same process, a 6th of the range, about 54 pips, probably like around here as the entry. And same thing, stop a little bit up here just to keep the 3 risk reward, target the midpoint, maybe even the range low. Got it?
Yep!
Okay, transition to Euro JPY. Okay, so again, we are in a pretty clear downtrend. So we'll map this out real quick. So we got this high, we got this low, got this lower high, got this much lower low, and we just recently put in this high, although we never fully touched this level of supply, although I suppose you could say this whole area is fair game. And now we are headed lower. So again, if we're going to continue structure, we are going to trade below this lower low right here. Now, if we were going to transition away from that structure, I think this is a key level to watch, this demand level. This is probably where we would experience some buyers entering the market to change things up and push price back up. Also, that isn't necessarily a counter trend, because this is the high, right? This is the high off of which this low was made. So this next high could easily trade into this level and be consistent with price structure, this downward structure. So let's map this out. So we even do this whole thing. So this is like an order box. So literally from the first buy candle to the last buy candle at the top. That's generally how I view order blocks, and so I think that's a decent zone to look out for. Let me get rid of this stupid arrow. Get out of here. Okay. So like I said, we could continue easily and move all the way up to this level in here for that perfect circle. That level in there to grab any sell side liquidity, and then ultimately come back down to make a lower low. Okay. Get rid of this nonsense. Now this is a supply zone. Pretty decent supply zone, I suppose, but I don't. It's called like it's already at the midpoint of this range. If you consider this the low and this the high, it's near the midpoint, and clearly you got a reaction based off of this area. But that doesn't mean if you have a midpoint supply, it's not based off of the structural high or a structural low for demand zone, then it's just not as reliable. And you can take trades off it, certainly, but if you're basing this off of structure, it's not going to be as reliable. So for that reason, I usually don't take those unless I'm absolutely convinced. Now, if I was watching this closely, hard to say what I would have done. Hindsight's 2020, obviously. But when you see these wick reactions, like you see, and this is the 4-hour chart, so I'm sure on the 1 hour it's even more aggressive. Yeah, tough to say. So, seeing this big wick reaction, maybe that would have convinced me to do another retest, which would have worked out well. But still, I generally like to wait for the more or the higher conviction sells moving up to the definitive supply zone, the zone where if it goes higher, it would be a break of structure. So I still think that it's possible that price continues this uptrend, maybe pulls from this level of demand one more time before coming a little bit higher. We could even be range bound for a little bit. Hard to say. Who knows what's going to happen? Only the future knows. But eventually, I think it's certainly possible that we trade into this level of supply, near this previous high before making a new low, or even possibly just catching a bid in this demand level again to shift direction of the structure. But still, I think this is the level to watch, this supply zone, because this is the previous high off of which this low was made. And we are headed higher for now. And, this could totally have been the supply that we pull from before making a low. So price could go straight down from here and break this low for a new lower low, because that's ultimately what I think is going to happen, assuming that structure continues. But still, this is the key level to watch in my mind. And until then, kind of just potentially range trading between this supply and this demand, which you could totally trade. It's very possible it keeps doing that for a while, but still not particularly interested in that kind of shorter time frame range trading. I'd rather trade the structure. So yeah, that's Euro JPY. But let's transition to our final pair, and this is the Swiss franc and yen. Okay, so I saved the best for last. Not that I care really that much about this pair, but I really wanted to show this price action. And it's actually going against me a little bit, but I still want to outline, because this was just a good example of a break of structure move. Now, it couldn't, like I said, we're seeing this retracement right here, so it could end up being a bad example in the sense that it wouldn't have been a trade that worked out. But I still think that this price structure is instructive and will be useful to apply to other trades. And now, why do I say that? I'm glad you asked. So here's this low right here. Huge impulse, made this high right here, made a low here, made a lower high, and then we made a lower low. So this is the official break of structure, because we were in an uptrend right here. You can call this the high, and then there's some low way over here in the corner. So a low way below, and then we made a higher high, and then a higher low, and then a higher high up here, and then a higher low here, and then we made that lower high. This is where you start getting suspicious. You're like, what's happening with price action? Where are we headed? And then we make a lower low, so an official break of structure below this, right? And as soon as you see that, that is your cue to look for some sort of sell off of a supply zone. And this was the area of supply. Again, a very large zone, not exactly easy to enter at the bottom and have your stop at the top. So again, you do the midpoint roughly of the zone. That's where this dashed red line is. That's where the entry is. Stop right above here. Target new low. And hard to say. It looks like this is going against right now. Basically right back at that center point. But still, I think based off of structure, based off of what is presumably this is the supply zone. We had this big impulse down right here, so because we have this consolidation and then the impulse down. So this is the area of supply where we would, I would assume have all that sell side liquidity. So we come back in, we retested, got that midpoint. You can tell it was a pretty strong reaction with this wick, and then we came back out below the zone. And now we're coming back up, so we'll see what happens. But nevertheless, this is a good example of a break of structure supply zone trade. And this is what you would probably want to be looking for in all pairs that you're trading. If you do like the structure, supply, demand zone strategy. Because this is a prime example. You got the high, you got the low, got a lower high, and then you had the official break of structure. Because as soon as you see the break of structure, that's when you're looking for the pivot point, right? So this would be the pivot point, the supply zone. Because we had a break of structure to the downside, so we are now bearish. And we are looking for sells, and the obvious point to look for sells is in the supply zone near that previous swing high. So yeah, that pretty much does it. I hope all that was clear.
Yep.
All right, well, with that, I will leave it. But as always, stay happy, humble, and most importantly, rich. Just kidding.
I'm really rich.
And I'll catch you all next week.